Hey, welcome back. It's Jason Walter here. It's been an absolutely wild ride for our US housing market over the past 15 months. So mortgage rates dropped big time last year, and that was one of the main reasons why demand for real estate has absolutely surged. However, what we're seeing right now is a step in the right direction to have some normalcy in our housing market, which frankly is very much needed. Home buyer demand still remains very strong and housing inventory still remains very low. In addition, mortgage interest rates are still hovering at just under 3%. So in today's video, I'm going to be sharing the latest housing market update. And part of this update comes from a new report from Realtor.com, which includes data up to August 28th of this year. In my opinion, these updates from Realtor.com are very helpful because they provide data on a much more timely basis than the National Association of Realtors or the California Association of Realtors gives us. So for example, the National Association of Realtors and the California Association of Realtors won't post August housing market data for another couple of weeks. In any case, Realtor.com in their most recent report announced that the median list price, which is of course the seller's asking price, has recently started to slow down. Listing prices grew by 8.6% from last year. That marks 5 straight weeks of single-digit price growth after a whopping 50-week streak of double-digit price growth. However, despite the slower growth rate, the median list price remains near its record high level. Realtor said, additionally, this rate of growth is still higher than we've seen historically. We expect prices to ease as we head into the fall, which will mean still strong pricing for sellers and a window of opportunity for buyers. A good analogy about our US housing market in general right now is that it's going about 90 miles per hour compared to 130 miles per hour earlier this year. In other words, the foot is still on the pedal, but we're not going as fast. In order to cool off this housing market further, we need more houses to be listed for sale. Realtor.com stated that they have been seeing more home sellers list their houses for sale in 20 out of the last 23 weeks. In addition, we're moving closer in the direction of what we saw in 2019, which was more a normal real estate market, unlike 2020. But housing inventory, which of course is the number of houses listed for sale, is still down 24% from 1 year ago. However, this is a huge improvement from earlier this year when we had about half as many houses for sale compared to a year ago. And by the way, before we continue on to the video, please hit the like button. I greatly appreciate that. And also, if you're thinking about buying or selling a house from virtually anywhere in the US, then go to homeandmoney.com/Jason. All right, so going back to this report, homes are still selling very quickly in the US on average. So homes are selling about 15 days faster now compared to 1 year ago. It took home sellers about 39 days in August to accept an offer from a home buyer, and that's 2 days longer than June's record fast pace. All right, to summarize this report before we continue on to this video, compared to 1 year ago, the median list price has grown 8.5%, the number of new listings increased by only 1%, and total housing inventory is down by 24%, and houses are still selling very quickly, about 15 days quicker than last year. So what does this all mean if you're a home buyer or if you're a home seller? So every market in the US is different, right? But in general, what we're seeing right now is a sense of normalization of our housing market. Now, don't get me wrong, because I'm not saying what we're seeing right now with our housing market is not 100% normal, but it's not as hot as it used to be compared to earlier this year. So here's my advice to you. If you're looking to sell your house, be very careful not to overprice it. This is because buyer demand has slowed down and housing inventory has increased. If you're a home buyer, you may see more options for houses for sale. This could mean fewer competition amongst other home buyers for those houses. Now, depending on the house, this could mean that you do not have to write a super aggressive offer like you would have earlier this year. However, like I said, every housing market in the US is very, very different. So your area may be very, very hot, or it could have cooled off drastically, giving home buyers a better chance to buy a house. In addition, what I'm personally seeing is a lot of overzealous home sellers where they're pricing their houses way, way too high. So it's my personal opinion we'll probably see more and more price reductions in the coming months if this happens, and especially if home buyer demand continues to slow down. Okay, changing gears slightly, I have some very big news to share regarding mortgage loan forbearances. Data analytics firm Black Knight reported a few days ago that the number of people in forbearance dropped to 1.7 million people, which represents 3.2% of all U.S. mortgage loans. That's down from the almost 5 million loans in forbearance back in May of last year. The big news that I have to share with you is that out of the 629,000 mortgage loan forbearance plans that are slated to be reviewed for extension or removal this month, nearly 400,000 are set to reach their final expirations. What this basically means is that nearly 400,000 homeowners in the US are entering their final month of forbearance. It's going to be very interesting to see what these homeowners do. If history actually repeats itself, then about 28% of these people or homeowners will opt to do a loan deferral in which all their missed mortgage payments gets added to their loan balance. And 7.5% will either refi or sell their houses. And speaking of mortgages, let me give you a quick mortgage interest rate update. So Freddie Mac announced last week that the average 30-year fixed rate mortgage was 2.87%. This is unchanged from last week, and it's on par with interest rates from 1 year ago. And mortgage interest rates have remained below 2.9% for the last 8 weeks in a row. And speaking of mortgage loans, the National Association of Home Builders announced a few days ago that home buyers using conventional loans to buy brand new houses made up 76.3% of all new home sales in the second quarter of 2021. This was the largest share of new home purchases using conventional loans since the beginning of the Great Recession in 2008. Only 12% of new home sales came from FHA buyers, 5% from VA loans, and only 7% were from all cash buyers using no loan whatsoever. Although there's a relatively low rate of cash sales for brand new home purchases, there was a much higher rate in the resale market for existing houses. According to the National Association of Realtors, 23% of existing home transactions were all cash sales in July of 2021. That's up from 16% from 1 year ago. So in other words, there's almost a 50% increase of cash sales from 1 year ago for existing home sales. So check out the link below if you want a real estate agent referral from virtually anywhere in the US. Check out that link below. Also, if you got any value out of this video, please hit the like button and share this video with your friends. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and I look forward to seeing you on the next video.